I would like to ask you about the bull cycle. Do you think that we're entering a new bull cycle for venture funding?
Yes, I do think so. I think we are entering into a new cycle. Maybe it's not a bull cycle, but it's a new cycle of venture funding. And if you look at starting 2020, the market was kind of grinding higher. In 2021, we saw the top of the market, should I say, with roughly 35 billion of funding in venture. And that was the actual top, both for crypto and non-crypto funding. And in 2022, this really came down to 20 billion, and then it dropped down even further to 10. And then last year, we were trailing at roughly 13 billion of venture funding in crypto space. I suspect that this year will be roughly around 13, 14 billion. Early data has been coming in out of Q1. But we are getting into a new cycle as we speak, yes.
And Sep, why do you think the numbers have dropped so much from 35 to 20 to 10 and then now in the teens? What do you think? Is it the liquidity profile? Is it the asset class? What do you think is driving this less interest from allocators towards VC funds in crypto?
You know, I think there's one thing that comes top of mind. It's basically interest rates. It's macro driven. Everything is macro driven. In a zero rate environment, it's really easy to pour money into risk assets. As you see rates climbing higher, starting in 2022 and above and beyond, this is where the markets are trending lower.
So, in your opinion, what metrics and factors matter most in today's funding environment, and especially that we're talking about a tighter funding environment?
I think we're really going into a what we call a mean reversion on the funding side, and it comes down to fundamentals. So when you have tighter economic and macro environments, people are more focused or get more focused on fundamentals, which we hadn't seen in the last few years, but now this is really coming into effect, and all the investors across the board, again, crypto and non-crypto, are looking for really good fundamentals to be able to invest.
Obviously, you mentioned there's a shift towards fundamentals, and that's what investors are looking at. Did you see the impact of that towards when it comes to valuations of crypto firms when you look across the spectrum of firms are raising money now?
Absolutely, absolutely. Valuations. If you look at valuations and you overlay them with the total amount of funding, they're highly correlated. So if you look at 2021, or even should I say, taking a step back, 2020, valuations were quite normal. In normal, I mean, you would do seed deals in the $5 to $10 million valuation range. You would do Series A deals at the 10 to $30, $40 million valuation range, and that upticked about 5 to 6x in 2021, in line with all the funding. And we went up to, doing seed deals at 30, 40 million, and the Series A's were coming in at above 100 million. So, and of course, with the bear market, with the winter, again, reverting to the mean, valuations also mean reverted. And now we're kind of seeing a little bit more normal valuations. But I think, to me, they're still very frothy. Valuations are still frothy just because there is a lot of money around the sidelines and too much cash chasing deals.
So when you hear from limited partners today, and especially with regards to exposure to digital assets, what do you hear from them? What are their insights and perspective toward that?
Look, on one hand, they are extremely excited about this asset class, and they want to have more and more exposure, which is great for us. We've been pushing this, since 2019 when we launched our first fund in the digital asset space. But on the other hand, they also are all questioning, where are returns going to come from? Which is a very interesting topic. If you look at exits and liquidity from the venture world, specifically in crypto, there hasn't been a ton. And I'm hoping that, with more deregulation and the new administration in the US, we will see more and more M&A and exits, and I think we will.
So bigger focus on fundamentals, asking where the revenues are coming from, lower valuations. So what are the crypto type of crypto firm you guys are looking for that you think fits this criteria that LPs are looking for and actually can make great returns from a VC fund perspective?
So look, I think probably like 4 areas that we're looking at specifically. More crypto native side is Bitcoin and everything around the Bitcoin economy. So using Bitcoin as a financial asset, as a monetizable asset, as opposed to a store of value. So things like using Bitcoin as a collateral to borrow, lend, getting a fixed deal out of Bitcoin, staking Bitcoin. That is really interesting. That still remains a bit crypto native. Real world assets and tokenization is obviously a big one, and that is kind of coming to fruition slowly but surely, whether it's private credit, tokenization, real assets such as real estate, and more importantly, tokenizing the dollar, also known as stablecoins, which is a big theme, and decentralized physical infrastructure such as DePIN. Using blockchains, combining blockchains with physical, tangible infrastructure, and getting an ROI on top of that, right? So those are the kind of bigger themes that we're looking at, and drilling down into stablecoins. I think that is the biggest market with the biggest product market fit that we've seen in the space.
Thank you so much, Sep, for joining us this week. That was Sep Alavi, General Partner at White Star Capital.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.